Hello traders and welcome to another video analysis. Today is Friday, the last day of April 2021. Let's take a look at the Forex calendar because it looks like the calendar is very busy today. Data from Japan had mostly disappointed market participants. They were both worse than expected actually. Including the national CPI. The only thing is that industrial production is better than expected, PMI manufacturing is better than expected, and the unemployment rate is going down from 2.9% to 2.6%. All the data published overnight were from China. The PMI manufacturing was worse than expected, and it was released at the level of 51.1. while the expectations was 55.9 and the previous reading was 51.9. So this is a kind of a bad reading from China. The final market manufacturing PMI from China is 51.9, which is better than expected number of 50.9. During the London session, we got some data from the Eurozone, like GDP from France, retail sales from Germany, consumer spending from France, GDP from Germany and Spain, and Italy, of course. So we will see if there will be some kind of a increase in the gross domestic products of the European countries, and of course we have a gross domestic product data from the Eurozone itself, including the consumer price index, which is expected to increase from 1.3% to 1.6%. There is a Swiss National Bank Chairman Thomas Jordan's speech at 9 o'clock, so we will definitely take a look at the US dollar to Japanese yen, US dollar to the Swiss franc as well. The key data for today are scheduled for release during the New York session, and those are gross domestic product, this time from Canada, scheduled for release 1:30, and of course the PCE core and personal spending data scheduled for release 1:30. There's plenty of other data here, but they are not that much important for the market participants. So what we can do now, I think we should go to the Australian dollar, because we got some data from China, and very often as a commodity currency, the Australian dollar is being affected by the data from China. As you can see, we got a bounce from this short-term trend line. We called it like a failed neckline. We bounced towards 7,822. But there is still no breakout, and this is the key technical resistance levels for all of the bulls, because it still has not been violated. If it is, then the market might go as high as 7,850. That would be the level of the previous shoulder, but please notice that we still below, like 150 pips below the highs around 8,009 pips. So right now still no decisive breakout. The market is trading in this consolidation above the neckline. If we break below, then of course we got some of the Fibonacci retracement levels. Maybe one of them will help the bulls to go back up again. If they are violated, market would likely go towards 7,553. So that's the Australian dollar. Let's take a look at the Japanese yen. So what do we have here? The first thing that we can notice is that the market is still going up, is bouncing higher. So the bounce was from the 38% of the previous wave, 5 wave up, right? So that's the whole retracement, and the bounce was around the level 109.1, 109.37. This is the supply zone, of course. Those two are technical resistance levels, and we got first upper shadows on a daily time frame chart candlesticks. So if there is a failure here, we can even put some Fibonacci retracement here. It would be around 50%, I guess. There you go, it hit the 50% straight on 109.29, and we got no breakout here. So if we will fail to go higher, especially above this golden trend line, then of course the market will reverse and go lower below 38% towards 50% at 106.79. So please keep an eye on this market, as we are just right now in very interesting zone trading here. US dollar to the Swiss franc. Will Thomas Jordan give us some kind of a clue? Somehow, as you can see, there is still uncertainty in the US dollar here. It looks like we got the fifth wave completed sooner than expected. So right now I will just get rid of this, and I will move my scenario of a 5-wave advance here. So that would be the wave 4, and that would be the wave 5, which means that this 5-wave advance had been completed, and this is a part of completely different cycle. It might be corrective, it might be impulsive in nature. We will see in the future, but what do we know right now is that we broke below 50% of the Fibonacci retracement. 38 is no longer needed, so we might get rid of the 38. Yes, we hit the 50, 9,112. The local low was made today at 9,080, but we are heading definitely somewhere else. We are heading lower. Most likely we are heading towards the level of 9,045, 9,027. The second one is the Fibonacci 61% for Fibonacci retracement. Key technical support, let me just make it green. The key technical support is 8,998, which is of course the current the 9,000 basically 9,000 pips level. So that's the updated of course analysis. Let me just put one more trend line here. There you go. From the top of the wave 5, we got something like this going on, and the market keeps trading below this level. So we need to break above 9,214 in order to bounce significantly towards 9,377. So far it looks pretty much impulsive, which is why I'm wondering whether this down wave will stop, because right now we are in the oversold market conditions. 30 points, which is very, very low. We can bounce anytime, but I think that we will have this test of at least 61%, or maybe even the 9,000 pips level. So those are our targets. We can of course make them a little bit visible here by making them like that. This is the zone I'm talking about. That's the zone which is in particular interest of boost. So that's the support zone. So this is how the US dollar to Swiss franc looks like. We got the Japanese yen, we got the Swiss franc, we got the Australian dollar. I think we should take a look at the US dollar to the Canadian dollar. Right now, what is going on? We have a new low at the level of 1.2267 after a visible failure at the level of 1.2647. It's been trying, the bulls has been trying to go up like several times. They failed to break above the short-term trend line resistance as well. So what's happened? The new lower low happened. That's what. And we got, of course, the downtrend, as you can see, the downtrend continuation towards the key technical support right now in the long term, 1.2244, which is very, very interesting what market will do on this level. We are approaching it basically the whole week. We've been trading down. We are approaching this level, so please keep an eye on this level. All of the other levels are now technical resistance, 1.2366, 1.2468. What will happen here is very, very important, because we are already at the extremely oversold conditions. As you can see, the RSI is on the level of 30, so we can bounce anytime soon. But first we need to hit the level of 1.2244. So please keep an eye on this level and watch the market reaction. The higher we bounce, the better, but we still have to go more than 2.28% in the bounce in order to call it some kind of a important local low, or even a swing low. So any bounce towards 1.2666 doesn't count. Let me just move this one so we can see where we should bounce. Basically, we should bounce at least above 1.2527. So closer to the 1.26, the better. Basically, if the lows will be somewhere around 1.2244. So that's the scenario for the US dollar to the Canadian dollar. We will see how the data will affect the market behavior. So that's everything for me for today. Thank you very much for watching, and I hope I see you guys next time. Bye bye.